Okay, let's unpack this. Welcome to the Deep Dive. We've got a stack of really critical global analysis today, stuff that connects, immediate crises. Things like military escalations, political risks, connects them right back to these deep strategic forces shaping the whole global economic picture. Today, we're cutting through the noise from analysis dated November 3rd. And our mission is pretty direct. We need to quickly get through four major global developments. We're talking military tensions, high-stakes political risk, and of course, the incredibly complex U.S.-China dynamic. The goal: extract the core insights you need to really understand what's happening and, frankly, why you should care right now.
Yeah, and if you look at these sources just straight off, the immediate thing that jumps out is, well, the sheer breadth of uncertainty. It's striking. We're seeing a world that's kind of oscillating almost violently between these extreme short-term moves, like, the very real threat of military action we'll talk about, and these really profound long-term strategic shifts, like China's determined anti-reform movement, which is designed really for decades of strategic resilience. That contrast, that back and forth, that's really the key understanding what's going on right now.
Okay, let's start with the most immediate, maybe the most explosive news first.
Yeah.
Down in the Caribbean, there are reports suggesting the Trump administration has actually decided to launch military strikes against Venezuela. And the potential goal here seems to be overthrowing the Maduro regime.
That's right. The reporting, you see it in places like the Miami Herald. It says they're targeting Venezuelan military facilities, specifically facilities linked to the Sun Cartel, which the U.S. alleges is led by Maduro himself and is, deeply embedded within the Venezuelan military structure.
So this isn't just framed as a democracy issue anymore. It's explicitly targeting alleged narco-trafficking at the highest levels.
And the strategic shift here is really the escalation of pressure. Washington has doubled the reward for Maduro's arrest. It's now a historic $50 million.
$50 million, wow.
Yeah, highest bounty ever offered by the U.S. government. That signals, absolute intent to remove him. It's not subtle.
And the military buildup seems to confirm this isn't just talk. We've seen a huge U.S. deployment in the Caribbean recently. We're talking the USS Gerald Ford Carrier Strike Group that's got, about 90 aircraft?
Around 90 aircraft, yeah. Plus F-35B fighters deployed in Puerto Rico. They seem to be shifting focus from just stopping ships at sea more towards preparing for land targets.
Okay, but what's the scope? Can this force actually do what some people fear, like a full invasion?
That's the key question. And the analysis from experts like retired Marine Colonel Mark Cancian confirms this deployment is absolutely sufficient for airstrikes and for deterrence, certainly. But, and this is crucial, they emphasize it is not enough for a full-scale ground invasion.
Okay.
If you remember the 1989 Panama invasion, which was a much smaller, less militarized target, even that required about 30,000 troops. This force we see now, it's designed for surgical strikes.
Right, so targeted strikes like we saw with Soleimani.
Exactly. Trump's stated preference seems to be for those kinds of targeted sort of decapitation strikes. It suggests maybe a desire to avoid a long drawn-out occupation. But the intent to dismantle the regime's leadership, that seems pretty absolute. And it definitely raises immediate stability risks, regional risks, really, throughout South America. Big time.
Okay, so moving from that threat of external military action, let's look north to the threat of internal political collapse, maybe domestic political risk in Canada. Prime Minister Carney is facing a really high-stakes budget vote this week.
Yeah, this is fascinating for political risk watchers. Carney's basically said he's prepared for an election if his generational investment budget fails in the minority parliament.
And it's really on a knife edge, isn't it? The ruling Liberals, they need exactly 3 votes from opposition parties, either the Conservatives or the NDP, the New Democratic Party.
Just 3 votes. If they don't get them, the government could fall, triggering a new election within, 7 months? It's a real tightrope walk.
And the budget itself, it seems kind of contradictory.
Well, it tries to do a lot. It includes significant economic investment, infrastructure spending, things the NDP might like. But it also has this ambitious goal of achieving a national current account balance within 3 years.
Which requires fiscal discipline.
A huge amount of fiscal discipline. And that's where the conflict comes in. Because how do they plan to achieve that balance?
Right. The deficit number itself, it's forecasted to hit 75 billion Canadian dollars next year. Yeah. That seems to be the flashpoint. Why is that number so politically charged right now?
Well, it connects to this broader anxiety, really, across North America about debt and spending. The budget proposes increased defense spending, but alongside that, significant spending cuts for other departments.
Tough. How big?
Up to 15% by 2028, 2029 in some areas. So that makes it almost impossible for the NDP, which is more focused on social spending, to support it.
Okay.
Meanwhile, the Conservatives, they're demanding hard deficit limits. They want it below 42 billion CAD. So Carney's caught in the middle.
So it's not just a Canadian domestic issue then. It kind of reflects this global debate. Do governments cut spending now to control debt, or do they invest heavily to try and stave off recession?
Exactly. It's a microcosm of that larger tension.
Before we move off Canada, just a quick kind of surprising diplomatic note here. Shows how tense things are, even between close allies. Carney apparently confirmed he had to publicly apologize to President Trump.
Yeah, that was over an anti-tariff ad run by the Ontario provincial government, not even the federal government.
Right. And this ad had previously led Trump to actually interrupt major trade talks. He called the ad deceptive and fake.
It just highlights the incredible fragility, maybe, of diplomatic relations right now. Even seemingly minor provincial issues can blow up into international incidents.
Okay, so now let's get to the core economic and strategic rivalry that really underpins so much of this. The U.S.-China standoff. President Trump graded his recent Busan summit with Xi Jinping 12 out of 10. High praise.
He did, but the deep analysis, particularly coming out of Asia, it paints a much more sobering picture. Let's dig into why the U.S. tariff strategy, broadly speaking, has largely failed to deliver the structural results it aimed for.
Where'd it go wrong?
Well, Nikkei analysis points to three critical strategic errors Washington made. First, the tariff-first failure. The idea was tariffs, some reaching, 145% would fix the trade imbalance, but they didn't.
Did they reduce imports from China?
They did. China's direct exports to the U.S. fell about 16.8%, but, and this is the kicker, their global exports actually grew 6.1%. Transshipment, mostly. And crucially, the U.S. trade deficit. The very thing the tariffs were meant to shrink. It expanded by 23%.
Wait, hang on. The policy designed specifically to reduce the deficit actually made it bigger.
That's right.
It sounds like. We shot ourselves in the foot more than we hurt China. How did that transshipment thing work so well for them?
It's almost a textbook example of unintended consequences. The U.S. tariffs basically pushed, or at least accelerated, the movement of Chinese manufacturing out of China and into third countries. Think Vietnam, Mexico, others. These countries would then do the final assembly, maybe some finishing touches, and ship the goods into the U.S., often tariff-free or under lower tariffs.
So we essentially subsidized the movement of Chinese goods through other countries.
Pretty much, and the U.S. consumer ultimately paid for a lot of it through higher prices or shifted supply chains. It didn't stop the flow, it just rerouted it.
Okay, error number one. Tariffs backfired on the deficit. What's the second error?
Isolationism. By imposing tariffs not just on China, but also on allies Japan, Europe, the U.S. made it impossible to build the kind of coordinated, cooperative approach needed to actually contain China's global flow of goods, especially through those third countries.
Right, you need allies to police the transshipment routes.
Exactly. Instead, China actually strengthened its ties with countries maybe feeling alienated by U.S. policy, like Russia, others in the Shanghai Cooperation Organization.
And the third error?
Short-term focus. Beijing is clearly prepared for what they call a Chijusan, a prolonged, protracted struggle, they think in terms of decades. Washington, on the other hand, operates on much shorter political cycles. Trump faces pressure for results ahead of, say, the 2026 midterm elections. China believes the more Washington rushes for a quick deal, the more concessions Beijing can potentially extract. They see time as being on their side.
Okay, so those are the strategic flaws. What about the actual truce that came out of that Busan summit? Was it a breakthrough at all?
Well, reporting from The Economist suggests it was really just a temporary pause. Basically, freezing the weapons, each side was pointing at the other.
So what were the terms?
Pretty limited. China agreed to delay restricting its exports of rare earths for 1 year. That's a big strategic lever for them.
And the U.S. side?
The U.S. delayed imposing threatened 100% tariffs on certain goods and held off on export control threats against some Chinese subsidiaries.
But the existing tariffs stayed.
That's the critical point. The truce was highly conditional. U.S. tariffs on Chinese goods. They remain astronomically high. On average, 47%.
47%.
Right.
Compared to what before Trump?
Low single digits, typically. So 47% fundamentally alters the cost structure of global trade. This isn't some temporary spike anymore. It's looking like the new baseline reality for now.
And connecting this back to the bigger picture.
Yeah.
You mentioned structural forces earlier.
Yes. The sources really warn about this. The current global economic imbalance. Think of it as the U.S. defined by excessive consumption and imports, needing goods from abroad, and China defined by excessive manufacturing and exports, needing to sell those goods. This imbalance is reaching historic highs.
Historic highs.
Yeah, and this dynamic, where dollars flow out from the U.S. to pay for imports and then flow immediately back in as China and others buy U.S. bonds and assets, it directly echoes the kind of structural forces, the imbalances that built up and eventually triggered the 2008 global financial crisis.
That's a terrifying echo. Which brings us to a really important question. Why has China, despite all this trade war pressure, seemed relatively resilient, able to withstand U.S. pressure in ways that maybe even some U.S. allies couldn't?
Right. And this leads us into the really profound analysis of Xi Jinping's anti-reform movement. This is the long-term strategic context we need to understand.
Okay, anti-reform. What does that mean practically?
Well, the problem Xi saw, starting around 2012 when he came to power, was that the previous era of reform, under leaders like Deng Xiaoping, Jiang Zemin, Hu Jintao had, in his view, created critical weaknesses for the party and the state.
Weaknesses like what?
Things like decentralization of power, which he saw as weakening the center under Hu Jintao, rampant corruption, which was genuinely eroding the Communist Party's legitimacy, and, crucially, a dangerous economic reliance on the West, particularly the U.S., for growth.
Okay, so he saw problems created by opening up and reform.
Exactly. So his strategy, which scholars are calling this anti-reform movement, was a deliberate reversal of that liberalization trend in many ways. It meant reasserting pure Leninist principles, full centralized Communist Party control over everything economics, politics, society, tightening the reins.
And how did he execute that? What were the concrete actions?
You can point to three key things that really enhanced China's strategic resilience. First, concentrating power. He used these relentless anti-corruption purges, starting back in 2012 and continuing, to eliminate rivals, enforce discipline, and ensure absolute obedience to the center. To himself, really.
Okay, consolidate power. What else?
Second, deflating bubbles. This is controversial, but Xi quite deliberately moved to pop the massive real estate bubble. Starting around 2020, they restricted financing for developers, knowing it would cause pain.
But wait a second, deflating the real estate bubble.
Yeah.
Didn't that crush a huge part of their economy? I saw figures saying sales dropped from like 18% of GDP in 2021 down to maybe 7% today. Isn't that a massive economic failure? How can you frame that as a strategic success?
That's the absolutely crucial question. And from a Western short-term GDP perspective, yes, it looks like a failure. But from Xi's perspective, the goal wasn't maximizing quarterly GDP growth. The goal was systemic risk mitigation. He judged rightly or wrongly, we'll see that the long-term danger of an uncontrolled financial collapse triggered by real estate leverage was worse than the immediate sharp economic downturn caused by intervening.
So trading short-term pain for perceived long-term stability.
Precisely. He chose to take the hit proactively rather than risk a much larger uncontrolled crisis later. It shows a strategic calculus focused on decades, not quarters. It's about party survival and state stability above all else.
Okay, that makes sense in that framework. What was the third action for resilience? You mentioned dual circulation.
Right, dual circulation or Shuangzhenhuan.
What does that actually mean for someone listening? Is China basically saying, look, we need to recession-proof ourselves by not being so dependent on selling everything to Americans and Europeans?
That's pretty much the essence of it, yeah. Dual circulation puts a much stronger emphasis on the domestic market, the internal circulation, as the primary engine of growth. It's designed to make China less susceptible to external shocks, whether that's U.S. tariffs, economic coercion, or disruptions to global supply chains. It's a strategic declaration that China intends to drive its own growth, reducing reliance on unpredictable foreign demand.
So the paradox here seems to be that China's highly centralized, opaque system, the very things we often criticize, has actually been maybe more effective at identifying and forcefully correcting what it sees as fundamental systemic weaknesses.
Than the U.S. system, which prides itself on being flexible, open, and responsive.
Yeah. Especially in preparing for something like a trade war or managing these huge internal bubbles.
It's a really important point. And this perceived effectiveness, this ability to impose painful adjustments for long-term goals, feeds directly into China's growing confidence. They look at the U.S., and Chinese analysts cite things like The perceived failures in managing the post-9/11 wars, the handling of the 2008 financial crisis, the chaotic COVID response.
Internal dysfunction.
Right. They see internal dysfunction and believe the U.S. is in strategic decline. Meanwhile, Xi's concentration of power, in their view, increases China's strategic clarity and decisiveness. Contrast that with Trump's focus on personal authority, which, from Beijing's perspective, just adds policy chaos and uncertainty to the U.S. side. All this reinforces Beijing's conviction that they are on the right long-term path.
Wow. Okay, we've covered a huge spectrum today. From those immediate military threats simmering in the Caribbean to the risk of a government collapse over a budget in Canada, and then diving deep into these long-term strategic shifts in Beijing. What really strikes me is the stark contrast between these sort of tactical, immediate crises and the much slower-moving underlying structural competition.
Absolutely, and I think the core lesson here for you, for anyone trying to make sense of this, is to learn to distinguish between the noise and the signal. The noise might be things like temporary tariff truces or, fleeting political apologies over provincial ads. Interesting, but maybe not game-changing. The signal. That's the massive military buildup off the Venezuelan coast. That's a determined, multi-decade anti-reform strategy aimed at building long-term resilience in Beijing, even at short-term cost. Those signals, the structural shifts, that's what's fundamentally shaping the next decade, regardless of the day-to-day headlines.
So here's something to think about. Building on that, our sources strongly suggest that this huge global economic imbalance we talked about, basically U.S. overconsumption met by China's overproduction, isn't just an abstract economic concept. It's been a central mechanism driving the massive asset price inflation we've seen globally. Stocks, real estate, you name it.
Because those dollars flowing out for imports have to come back somewhere, right? Buying U.S. bonds, stocks, property, keeping U.S. interest rates perhaps artificially low and pumping up asset values.
Exactly. So, if history is any guide, and this fundamental imbalance remains structurally unaddressed, while geopolitical tensions are clearly rising, how long can these historically high asset valuations actually be sustained before that underlying structural tension finally snaps?
That's the multi-trillion-dollar question, isn't it?
Definitely something for you to mull over or maybe explore further on your own.